Hi, this is Zach Meir from Zach's Traders Cafe with a look at the major markets on Thursday, the 12th of May. Starting off with the FTSE 100, and we're still feeling the benefits of that hammer candle on the 6th of May. That's done good work as far as consolidating the index just below the 200-day moving average zone around 6,200. You've got the 50-day moving average shown in blue there at 62.01. End of day close above the 50-day line should be enough to signal that we're back on track as far as the progress made since the January-February floor. The target then would be 6,500, while there's no breakback below 6,100. Noticeable that there's been a sort of double, triple bear trap from below the that 6105. Sorry, that 6070 March low ever since. So interesting there, and also the high low versus that 6036 initial March low for May is also potentially significant. So cautiously bullish on the FTSE, and of course, as we know, the recent past, whenever we've been in doubt, it has been better to err on the side of bullishness rather than bearishness. Onto the DAX, and here we had a not too surprising test for support back towards the 50-day moving average and the floor of this trend channel from the beginning of February. 50-day line currently at 99.42. That's sort of held so far, and one would expect it to hold on an end-of-day close basis. While it does, the initial target back towards the 200-day moving average at 10.188. So relatively tight trading parameters, unusually tight parameters there for the DAX. Onto the Dow, and here we can see how the 20-day moving average at 17,880 has proved not to be the trigger for buying, but actually the trigger for selling. We had a decent close above that on Tuesday, but back down on Wednesday. That doesn't look like a very good candle at all, in the sense that the market opened at the high and closed at the low. So one would assume that the Dow will head back towards the area of the main support, post-April support, which is 17,500, and that's just below the 50-day moving average at 17,611, but only an end-of-day close back below 17,500 delays the overall picture here, which is a return to, or a move to, 18,500 at the top of a rising 2016 price channel. As far as the S&P is concerned, we've also got that failure at the 20-day line, 2078, so obviously an end-of-day close back above that is now the buy trigger. In the meantime, there's the risk of a dip back towards the 50-day moving average at 2052 for this market, but only an end-of-day close back below it would really abandon the prospect of 2150 or 2200 at the top of this February price channel. Onto the NASDAQ, and here you can see that it's been about the failure at the failure just below the 200-day moving average. In fact, 4411, and really one would expect at least a test back down towards the 10-day average, 43.48. But while we're above the 10-day line, it's probably worth giving the benefit of the doubt to long positions that you have, even though below that there is then the risk of another probe below 4,300. So a bit fiddly there at the moment, but the glass is still half full while above the 10-day line. Onto the currencies, and let's hope that it's rather more simple. I suppose in some ways it is. Pound sort of died a death in terms of the price action. Want to see an end-of-day close back above the 10-day moving average at 144.94. That's the green line there, before assuming a new leg to the upside towards 148 is on its way. Only back below the 50-day line, 143.29, now regarded as being bearish. Euro-dollar situation is that of similar consolidation to the pound. Just want to see it maybe back above the 10-day moving average at 144.35, 114 rather, 35 on an end-of-day close basis to get us back to 116, which would be the top of the December price channel. Stop loss back below the 50-day moving average at 112.90. For dollar yen, been a bit of a mixed bag, rather messy, more messy price action of late. Still, I suppose, looking for recovery while we're above the 10-day moving average, 107.62, and the target then 110.54, which is the top of this falling trend channel from January, this looks like a sort of a bull flag situation on this occasion, as opposed to the failure that we saw last month at the 50-day line. Finishing off with gold, and here it's a case of well, consolidation, I suppose. We want to see an end-of-day close above the 10-day moving average at 12.79. Stop loss now, end-of-day close back below the 20-day average at 12.61. Target initially 1300, and then obviously that February resistance line projection at 1350. That's it from me. More updates at the same time tomorrow.